Good morning, good morning. How's everybody doing? Nice to see you guys. Nice to have you with me. Thank you for joining. Thank you. I know some of you are people that listened to the interview I did yesterday with Dale. So probably what we do here is a little bit new to you. You're not too familiar with what it is we do, or maybe not even familiar with the CFTC report and the data. And how is it that we can collect the information and gather so much information about what the institutions are doing with price? So welcome. Thanks for joining. We're going to go and take a look at the markets today. We're going to take a look at gold, the euro, the dollar, and we'll look at the stock markets too and see what's taking place with those markets. I see that we also have some requests to look at a few other charts, so we'll spend some time doing that as well. But as I'm on the Telegram channel, I see a lot of questions about, gold, for instance. I just made a comment with regards to gold, okay? And with the short-term bias being upwards, bullish. And many of you, when you hear that right away, you say, well, should I go long then? And that's one thing that you have to understand about biases and whether or not a bias means you want to get into a position, okay? Because it's one thing to say that the short-term bias is long. It's another thing to say, I want to open up a position to go long from here, okay? Because what are the key essential things when you go long? You need to know where's your stop loss, where's your target, right? And you need to know that it's going to make that move, like, with some certainty. Now, I posted on Twitter and on, let me show you the Twitter. Let me show you the post, okay? Let's dissect this and talk about where the opportunity really is here. Here's the tweet that I posted, okay? There you have it. Now, what did I say? Gold looking strong this morning and making its way toward institutional selling area. You see that red spot there? That's the institutional selling area that I'm talking about, all right? Now, some of you might be thinking, what the hell is an institutional selling area? Okay, good question. Let's get to that. What's an institutional selling area? This area here that I have drawn out, right here, this is an area that we have located where the banks were selling gold, okay? So they came into the market and they flooded it with sell orders, causing a massive drop in price like this, all right? Now, in order for price to move upwards on the chart, that selling area has to be removed. Because if the banks are going to hold that selling area, then that means price is just going to drop down from it, okay? So with price rallying up towards the institutional selling area, should they remove 1692? Why do I say 1692? Because 1692 is the very top portion of that selling area, okay? So between 1692 and 1684, there's orders there. There's orders, institutional orders, okay, between those two prices to sell gold. So those algorithms are programmed to sell gold when price gets up there, all right? Now, the only way that price is going to go higher is if those sell orders are no longer there, or they're there in lesser quantity than the amount of buying that's taking place in gold, okay? So we don't want to just jump to conclusions and say, oh, price is just going to rip right through that selling area right now, because that wouldn't be a very intelligent thing to do. It wouldn't be a very intelligent way to look at things. We want to let this supply area come into play, all right? When I say come into play, that means price has contacted the selling area, and we want to see how the algorithms are going to respond to it. Are they going to be filling in selling orders? You can see right here what's happening. You see how price tested that red area, and we're seeing a drop in price? This is exactly what I'm talking about. So selling is taking place from the banks right now, okay? How do I know it's the banks? Because that's the bank selling area. And so if price is dropping from that area, it's the banks that are causing the selling from that area. So if they remove the 1692 area, which is the very top of this selling area, then and only then do we have a short-term bias from there upwards towards, what did I say? 1720s. Okay? Right here. 1720s. So the question is, everybody's asking, so we go long? No, we don't go long. I said if 1692 gets taken out, then the bias, short-term bias, is to the upside, okay? Because that's what we're seeing right now, all right? Overall, the short-term bias is upside, but once that 1692 gets taken out, we can see a drive towards 1720s. Now, whether or not you want to get into a long position, it's up to you. But you have to know, if you get into a long position, where are you basing your stop loss, okay? Where are you basing your stop loss? If price comes up to this trend line and then decides to react from that trend line, are you going to freak out? Are you going to freak out? Or are you going to hold that until it gets up to 1720s? What if it starts to drop even further down like this? Are you okay holding a position like that? These are all questions that I can't answer for you, all right? I'm just trying to give you a heads up as to what we're seeing on the charts based on institutional buying and institutional selling. That's it. If institutional selling areas get taken out, then there's going to be momentum to the upside. If institutional buying areas get removed, then there's going to be momentum to the downside. So I'm just trying to get you to see what's happening on the charts, where the banks are buying and selling, and what is the potential for price once these areas get taken out. It makes sense to you guys? That's very key information for you to understand. So if you follow the analysis that we do, I mean, there's nothing more powerful than the analysis that we do. But if you don't understand the vocabulary, you don't understand what it is that we're laying out, then it's going to be very difficult for you to take this information and use it for whatever trading style you have. You may not trade supply and demand. You may trade whatever style you do, and that's fine. The key is that if you could take the information that we're providing to you and allow it to give you an edge in your trading, then that's what you want, right? So let me break it down in very simple ways, okay? I'm going to give the light system here. We do this every once in a while, so this is what we're going to do. I'm going to show you, just like the lights on a traffic sign, I'm going to show you, based on each time frame, what direction price is going to be moving in over time, all right? So when we look at the monthly chart here, we have a bearish bias, okay? So that time frame here, top left corner, that's our monthly chart. We have a bearish bias, so it is going to be labeled with red, okay? So what does that automatically tell you? That tells you over the longer period of time, we are expecting price to drop, okay? And there's plenty of reasons why we expect that. Some of those reasons I went over in yesterday's interview. But there's a lot of reasons why we believe this. This has been a build-up for quite some time. All right. Okay, so we're getting signals, bearish signals on the monthly chart. On the weekly chart, we are getting a yellow light. Okay. What happens at yellow light? Caution, right? If you're going and approaching the intersection, you see a yellow light. What does that tell you? You know, slow down. Slow down. Don't be so quick to think that it's going to do something. Because why would I say yellow light for weekly chart? All right. When we look at the weekly chart, you know, some people may say we're in a downtrend on the weekly chart. Okay. And I would highly contest that. In fact, everything that we've come to learn about trend lines and how the institutions recognize trends would say that the weekly chart is not in a downtrend. Now, I know a lot of traders, they would be drawing trend lines coming down like this, or better yet, like this, I should say. A lot of traders are trading, drawing trend lines like this, and they say, look, there was a previous low and a new high, and the new low surpassed the previous low. So there's a trend line to the downside. Aren't we in a downtrend? Absolutely not. without a doubt in my mind, there is no downtrend here, okay? For several reasons that I won't get into right now, but this is definitely not a downtrend. If it were a downtrend, then yes, I would light this time frame up as a red, being a bearish signal. I would definitely do that. But when it's not in a downtrend, that means momentum is not to the downside on that time frame. So although we're getting bearish signals on the monthly chart, it's not that price is extremely heavy on the monthly chart and we're expecting it to just collapse. But 6 months, 8 months, 9 months, 10 months, a year from now, when we look back and we look at this monthly chart, what we're going to see is a lot of red candles to the downside. All right. So that's why I'm saying, based on the monthly time frame, we have a bearish signal. Weekly time frame, no downtrend at this point. So we're on pause. It's yellow. Okay. It's yellow. So we're waiting for the momentum to really kick in here. Now we look at the daily chart. Okay. Let's look at the daily chart. And what do we see when we see the daily chart? There we go. Oops. You see at the bottom where price is reacting to? Okay. Let me point something out to you. Okay. Right down here. Do you see something? Do you see something that price is contacting here? You see that green rectangle on the bottom of the screen? Again, why do you think there's a green rectangle on the bottom of the screen? Because this is an area that we located as an institutional buying area. How do we know these things? How do we know that the algorithms were programmed to buy gold at that price? Well, you know, that's another subject that we won't get into right now. But we located that area a long time ago. And so we knew that depending on the context of where price was, it was very likely that when price comes into that area again, price was going to rally. Now, earlier this week, I was mentioning how the media was talking about a bearish gold. Okay, they came out with all these articles, you know, insinuating that gold was very bearish and it was likely to continue being bearish. And when we saw that, and we saw that price was coming into an institutional buying area, what do the institutions need when they buy? The institutions can't buy unless there's people selling. How do you create sellers? How would you create sellers in the market? After the market has already dropped. You know, retail traders love to get into a market after it's made its move. So this is already dropped. So how do you convince people to sell even more, okay, when we're coming into a buying area where the banks want to buy? Well, you need ways to do that. And so I found it very interesting that the media came out with all these bearish articles, and now we're hitting this buying area. So I labeled the daily chart as a green. It's a buy signal, okay? It's buying that's taking place. So when we look at the daily chart, if we were only focused on the daily chart, we should expect to see green candles being created on the chart, okay? So that means a week, 2 weeks, 3 weeks, a month, 2 months from now, when we look back and we see this exact area that we're at, there should be green candles that follow it. There could be some red candles, you know, in between those green, but mostly green candles with price moving to the upside. Okay? This is what we would expect. That's why I would say short-term bias is bullish. So that doesn't mean I just want to buy it. Okay? Because again, putting things into context, we have a bear signal on the monthly, which means over several months we should see it drop. But on the weekly, we have, hey, put it on hold. Let's not get so crazy here, right? So remembering that means price could go up a little bit. It could stall. It could drop from that descending trend line that retail traders are drawing on their charts. There could be a lot of things that are going to happen on this weekly chart before something very clear takes place. All right. So that's why I want to caution when I say ranging on the weekly chart, even though we have a bullish signal on the daily chart. Short-term bias is bullish, but doesn't mean I want to be getting into any long positions. Now, I'm a swing trader. Sometimes I'll take day trades if the situation is right for it. Okay. So there's many opportunities to take day trades. Now's not one, in my opinion, from my experience. I'm more of a swing trader. That's what I tend to do. So when I see monthly chart is bearish, what direction do you think I want to be trading gold in? You think I'm thinking about going long? Heck no. I'm not even thinking about going long. I'm not concentrated on going long. I'm concentrating on going short. Now, I was already short. I closed my positions already. Why did I do that? Well, because I saw what was taking place on the charts. I saw the lack of downtrend on the weekly chart. I saw the daily demand zone coming into play. And so this means that price was going to be moving upwards. And I didn't want price to move against my position. So I figured I'll close my positions now. I'll take my profits. I'll wait for the rally to take place. And once price creates some sort of a ceiling and it starts to shift momentum back to the downside, I'll time it with the rest of the markets, with the dollar and so forth, and then I'll get back into the market. So I'm focused on getting short gold. Okay, I have no other inclinations to do anything else except for getting in short gold. Okay. Any questions about what we've just covered right now? I want you guys to understand that, so that if you follow what it is that we do, and you hear the terminology, and you hear the bearish signals, and you hear the bearish bias, short-term bias, mid-term bias, medium-term bias, long-term bias, very long-term bias, then you know exactly what we're talking about, okay? So, again, gold, I'm only interested in going in short. Only, okay? So that's what's going on right here. So when you look at the daily chart, daily demand is in play. What does that tell you? Banks are buying based on this area. So you got to think to yourself, okay, so based on the context that I've just set out, we understand what's going on here in the chart. If the banks are buying here at this daily area, where would they want to take price to? Where would be the obstacles? What are retail traders looking at? And where do you think they would be trading? What's the sentiment in gold right now? Do you know what the sentiment in gold right now is? You know, most traders are long gold right now, okay? Which is pretty interesting because usually they're doing the exact opposite. But I'll tell you that as price has been sitting down here, they're getting in more and more short, okay? So knowing that, what do you think is going on right now in these markets? Why do you think price is acting the way it is? I can tell you why price is acting the way it is. The banks are trying to lure the retail traders that are in long to get into short positions. And when the majority of retail traders are in short gold, what do you think they're going to do with price? Very likely do that. Very likely. Okay? So the question is, once they move price from here, where is the next target going to be? Where's the next obstacle? It's likely going to be that descending trend line. Okay? Why? Because everybody is drawing that trend line. Okay? And it's not just the retail traders that are drawing it. The banks are observing that. And the banks only observe the trend lines because they know that's what retail traders are doing. And if they need to fill in positions, they need to know what retail traders are going to do, okay? Don't be confused. Don't think, oh, there's a trend line there. The banks are going to be selling at the trend lines. The banks are not your friends, and they're not examining the markets like you and trying to make money like you. That's not what the banks are doing, okay? There seems to be this misconception that, you know, everybody's doing the same analysis, and it's all comes down to who can understand the macroeconomics better, who can understand the fundamentals, the technicals, and all that stuff. And whoever can understand all those things the best are the ones that make the money. No, I'm sorry to burst your bubble, but it doesn't work that way, all right? It simply does not work that way. The banks move the markets for several different reasons. They make a ton of money doing it, because they are the ones that move the markets. They buy at the low prices and they sell at the high prices. But in order for them to move the markets around and make these profits, they need people to take the opposite side of the trades, period. And if all the banks are in on it And they are. How do I know? Because it's all the same corporations that own all the banks, okay? So they all work together. It's not one bank trading against other banks. When I hear people say that, I just roll my eyes because they have no clue what they're talking about, all right? It's not JP Morgan against Goldman Sachs, all right? It doesn't work that way. You look at who owns JP Morgan and Goldman Sachs, it's the same corporations, all right? So they're not against each other. You think the same corporations that own all the major banks, you think they're going to turn the banks against each other? Like, why would that make any sense at all? Of course not. So, so they're going to be examining that descending trend line on the daily chart, and there'll probably be some kind of reaction to the downside there. Okay. So bottom line, bearish bias over the higher time frames, bullish bias over the shorter time frames, but I'm not looking to get in short on this one. Okay. Very clear, concise. Well explained. You've been consistently saying these truths for weeks, Kevin. Great technical analysis and explanations again. Well, thank you, Bullseye Bear. Super clear. Good. So what do you think about NVIDIA? The guy asks. All right. If we got a chance, we'll get to that. Okay. Dollar. The dollar. Okay. So if we expect a rally in gold, what do you think the dollar is going to do? You think it's just going to rally? Likely not, right? Likely we're going to see a drop in price. And so that's what we're expecting. Yeah. Did we get a little bit of a push to the upside? Yeah. Whoop-de-doo. Okay. But we do suspect that we're going to be seeing a move to the downside. All right. It's just what makes sense. When we look, our bias on the dollar is bullish. We've been very clear on that. Extremely clear. Our longer term bias on the dollar is bullish. There's no way you can be anything else. And we have been bullish the dollar for a very long time now. Okay? Our long-term bias is bullish. All right. How well can this bullishness sustain itself is the question right from this point on, meaning in the future, 6 months from now, 7 months from now, whatever. When we look back at this chart and we see that there's a trend line like this to the upside and we see where price is price going to continue higher from these areas, or are we going to see price revert back towards that area again so it can refuel for another push to the upside? Because remember, when price moves away from a trend line, what's happening is that massive buying is taking place, okay? You see how we located the last area of buying here? You see how price dipped into that green rectangle and then shot up from it? That was an institutional buy area that we had located. Price dropped into that buying area, they filled in buy orders, and they shot price up aggressively. Now look how far price is from that trend line, all right? It's pretty far up there. So at some point, we're going to have to see some kind of a pullback, because it can only sustain itself with these big moves for so long until price needs to draw back down, refuel, fill in more buy orders to continue price to the upside. And that would typically happen on higher time frames. Okay? When price is overextended on one time frame, it typically means it needs to revert back to a higher time frame area. Okay? In this case, we'd be looking at the monthly chart. And when we examine the monthly chart, there's a lot going on here. Right here in this area, price just shot up like a rocket. Okay? Price just shot up like a rocket. So you know what we're watching for? We're watching for something like this, some consolidation, and then the next big move. Why would we think that? Well, because this is what typically happens. Okay? So when price gets very far away on weekly charts like this, when it starts to drop, what typically happens is forms this type of formation on a one time frame higher. So, am I saying the dollar is going to drop right now, this moment, and it's going to drop this far? No, that's not what I'm saying. All right. There'd be signals that we would be watching for to indicate each of these stages. Because in order for price to drop so much on the weekly chart, all the way down to that, ascending trend line, there are things that are going to happen on the 4-hour chart, and there's things that are going to happen on the daily chart to help facilitate that drop. And right now, when we look at those time frames, what do we see? We see ascending trends. We see ascending trend lines. Okay. They're all in good condition. Look at that. That's bullish. That's bullish. So is there any indication that this is going to happen right now? No, not that big of a move. But guess what? When we have these type of structures starting to dismantle, okay, and price starts to reverse to the downside, look at the trend line here. Okay, we have a trend line up here. Once this trend line starts to break, guess what? It starts to revert, and we'll start to see this move that we're talking about. So those will be the signals. So if you ever see me write something on Twitter like that we're getting a short-term bias signal, that means structures on the lower time frames are being dismantled. Ascending structures are being dismantled, which is opening up the charts for a further move to the downside. You always have to put things in context. Does that mean you want to go short? There's times where it's a good idea to go short. It depends. You want to make sure that there's no obstacles in the way and there's no institutional buying areas that price is going to contend against. If there's no obstacles, no institutional buying areas, guess what? When the short-term signal is bearish, then you jump in and you take, you ride that momentum to the downside. All right. So this is how I would go about reading things. So there's good potential for a drop like this over the longer time period. Longer meaning, if we start getting these bearish signals on these lower time frames, then the longer term bearish signals will be there. Okay. But over the very long term, we see this going higher, meaning that when we look at a 6-month chart, 2 years from now, 3 years from now, we will see that regardless of what happens here, there might be a drop, but over the longer, very long period of time, we'll be seeing price moving even higher. There's no doubt in my mind, okay, that 3 years from now, we'll look back and price will be higher than these highs that we're at right now. There's no doubt, because everything on the chart is setting up for that. Everything on the chart is setting up for that. Okay? But in order to time the markets, this is why most traders, lose monies, because they try to time the markets, but they have no idea how to time the markets. You need to understand these core concepts that I'm sharing with you today. Okay? The structures that the banks are creating, institutional buying and selling areas, and what's happening with these structures on each time frame and what it's going to facilitate. Okay? All right, so that's the dollar. We did gold. Euro is just the exact opposite of what we're dealing with the dollar. Okay? Same thing, but just in reverse. All right? Oil hasn't been doing much, and we expect it not to do much for the rest of the year. We've talked about this before. Massive ranging taking place. It's not a trade that I want to get involved in. Okay. But the S&P, this is a beautiful chart. This is a beautiful chart. And one of the charts that we were talking about in great detail yesterday during my interview. So we see more downside. We see at least 3,000s being contacted. Okay. Now remember all the stuff that we talked about, Jim Cramer saying this is going to be a good summer for stocks. Yeah. You know why he said that? Because the banks told his boss to tell him that they were interested in selling the market all throughout the summer and accumulating a massive short position, and they were going to need a lot of suckers to be buying it from them. Okay? That's why our friend Jim Cramer came out and talked and with all his mumbo jumbo and said, "This is going to be a good summer for some. This is going to be a good summer for stocks." Yeah. And then it did move up, right? But you remember the moment that he came out and said that it was going to be a good summer? If you bought it exactly at that moment, you would have been underwater. Okay? All of June, all of July, and only in August would you be back at surface level. That's what would have happened if you would have listened to Jim Cramer. Okay? But a lot of people forget the details of what was said, when it was said. Unless you're tracking and tracing these things and you do it professionally like I do, you wouldn't see what's going on here. All right? So all you would think is, you'd see the headlines and you'd hear that, oh, Jim Cramer said it was going to be a good summer for stocks. And you'd be like, oh, yeah. And then you go and check that out. And you're like, yeah, it was a great summer for stocks. Wow, that guy's really good at knowing exactly what's going on in the markets. He said good summer for stocks. It rallied all throughout July and August. No, it didn't really work that way. Okay. Yes, did it run up for July and August? Yes. And the whole time that everybody was buying, the banks were selling it to them, accumulating a massive, massive short position. Okay. And we could see this when we were studying the CFTC data. We could see it. All right. We could see it by analyzing the buying and selling areas that the banks were creating on the charts. And we could see it in the CFTC data. It was there. The signs were there. Okay. And I posted it here. Look. July and August. I'll show it to you. I'll show it to you. Look, July and August. Okay? There we go. There we go. You see that? Their short positions went from 68,000 to now being 103,000 short. Short. Okay? Don't worry about commercials. I know everybody's telling you, oh, if you want to trade the CFTC reports, you got to look at commercials. That is not what you should do, okay? Unequivocally, there's no doubt in my mind that that is the wrong advice. Because if you were looking at that, you'd say, oh, they're long 397,000, they're short 323,000. That would give you this false idea that they are long the market, okay? So you got to question why you'd be receiving advice that you should be focused on the commercials. Well, do you understand why they're telling you to focus on the commercials? Because they don't care about you. Those people don't have a vested interest in making your life better. Do you understand that? When these people make it on to the mainstream news stations, why do you think they're being let on those shows? Okay? You know who owns those shows? The same people that own all the banks. You know who owns all the banks? The same people are trying to sell the market all throughout the summer to you who they want to buy. So what do you think? They're going to allow somebody like me on TV to say, don't follow the commercials. You follow the non-commercials. The banks are accumulating a massive short position all throughout the summer. And all throughout this lead up, this is what they're doing. You think they would let somebody like me be on the news or be on any type of program on mainstream TV? Not a chance in hell. Because I'd be warning you about what the owners of that station is doing, or the owners of the program. So be careful who you take advice from, okay? And you don't have to just take my advice. I've been proving myself and building a reputation in this business over the last 10 years. And so people see what we're doing and they see that it's accurate. Okay, so commercials, look at that big increase in short positions as everybody was told to buy. Okay? Yeah, you're buying while they were selling. Okay? All right, look at that drop. Massive. Look at that drop. Massive. You know who's doing that? That's the banks. Selling, okay, after they lured you and everybody else into buying. Well, if you've been following us for a while, you wouldn't be suckered into buying this market. We are only focused on selling, okay? We are only focused on selling. So right now, this is how I would look at things, okay? I would say monthly chart, we're on hold right now. There isn't a strong bearish pressure in this market right now, okay? It was bullish. They dismantled that bullishness. They filled in massive amounts of selling orders into the market. They rallied price up into the selling area, and they filled in those selling orders, okay? So we have a bearish bias. But because there is no downward trend and there isn't a strong momentum to the downside, I put this on yellow status, okay? Caution. Just beware. Just be mindful. Just know what you're doing, and it's going to be moving down. You see that massive red rectangle there on the monthly chart between 46.36 and 43.71. That's an institutional selling area. You can take that to the bank, okay, 150%. That's an institutional selling area. When you see people talk about, oh, the market's going to make new highs, I don't understand where these people are getting this news from, okay? News alert, the market's not making no new highs. Nobody in the world can ever predict that the market is going to make a new high. Do you know why? Because that's an institutional selling area. You have to base your analysis based on facts, not what you think is going to happen because you just think it's going to happen, or because Powell is doing this, or because rates are doing that, or because the economy is doing this. You can't base it off of that. That's not realistic, okay? You have to base on what we know to be true. What do we know to be true? The banks move the markets. So if they filled in a massive amount of short orders at a very specific price, that's the last thing we know to be true, 150%. So there's not going to be any new highs unless the banks were to remove what we know to be true, and that is their institutional selling area. Period. Hands down, 150%. You can take that to the bank every single day. Okay? Market is not making a new high unless that area gets taken out. And nobody knows if that area is going to be taken out or not until they take it out. Period. Okay? So those people that are like, oh, the market's going to make a new high, they have no idea what they're talking about. I'm sorry. They may think they know, and God bless them. I'll pray for their souls, but they really don't know, because this is the reality. Okay? So the institutions recently created massive selling on the monthly chart. So there's a bearish bias, but caution. Okay? Caution. Now, let's go over to the weekly chart. What do we see here? Okay? Weekly chart. We have price moving in a downward direction. We have a descending trend line. Does that mean there's a downward trend? No, it doesn't mean there's a downward trend. Okay. And I'm sure some people are drawing that descending trend line. They're like, hey, previous lows were taken out, so we're in a downtrend. No, it doesn't mean that. Okay. So what would I label this? I will label it exactly the same. Okay. Exactly the same. Okay. We have a bearish bias, but proceed with caution. Don't just think that price is going to drop right now. We don't even have a downward trend, okay? Over time, do we expect it to go lower? Yes, we do. But this can play out in many different ways. What do I mean by that? Okay, what I mean by that is we could see, that's not what I wanted. We could see something like this. Price come up here, and then go down. That could happen, okay? So I'm not, even though I have a bearish bias on this time frame, meaning over the very long term, when I look back, I will see that price will make a low. From this exact moment, price can go higher. And I don't want to get in short based on this chart and then watch price go so much higher, all right? So I'm going to wait for proper structures to the downside to be formed that are going to be used to facilitate the continuation of a move to the downside on the weekly chart, so that the weekly chart can actually produce a proper downtrend. Okay? When that happens, then I know weekly chart will be bearish, and I'll label that sucker as red. And then I'll know I can take trades knowing that in the future, when I look back, where price is right now, it may go up just a little bit, but that's all I'm expecting is just a little bit. And I know exactly where to base my risk off of, because I'll locate the latest institutional selling areas on that time frame, and I'll base my risk off those selling areas. Bada boom, bada bing. And then the trades work like magic. Okay? But we have to be patient. You have to know what you're dealing with, and you have to be patient. You don't just jump in. You don't just, oh, you hear me say bearish bias, so you just jump in. No, it's not that simple. Okay? So that's what we got going on right now. And I'll share something with you right now. It's a little bit more advanced. These are things that we talk about in our level 3 sessions. If you're ever wondering what it is that we do in our level 3 sessions on Friday mornings, this is something that we were talking about in this previous level 3 session on Friday, okay? So as I was mentioning, do we have a weekly downtrend right now? The answer is no weekly downtrend. Okay? That's the answer. Okay. Could there be a weekly downtrend? The answer is yes. There could be a weekly downtrend. But what would be required in order for there to be a weekly downtrend? We need a downtrend on the daily to form to facilitate the weekly. Okay? We would need a downtrend on the daily to form to facilitate the creation of the weekly downtrend. And so we know what the banks do when they create downtrends. We know this. How do we know this? Well, you know the classroom sessions that we put on? You might see me posted on Telegram and on Twitter. We're starting a level 1 class. Level 1 deals with the institutional buying and selling. How do we locate institutional buying and selling? How do we know how to draw a trend line? What's a high quality trend line, low quality trend line? Level 2, we talk about structures and trends. How do we know when the institutions are creating a downtrend? How do we know when price is in ranging? All those details, this is what we do in those classes. We study historical charts and we do the analysis and we see the results of the conclusions that we come to based on the analysis. It's a brilliant thing. We call it the Sherlock process, okay? The Sherlock system and the Sherlock process of analysis. And it helps us to determine what's happening on the charts and what we conclude by the analysis. And then we look to see how price ends up playing out. So we can evaluate whether or not our conclusions are accurate or not. Okay? We don't do back testing. You know, a lot of traders, they do this back testing stuff. They have a bunch of rules. They type it into a system. They're like, okay, we want you to follow these rules and do it from this time frame moving forward, and tell me how many trades would you take, how many would be winners, how many would be losers, and see what the results are. That is nonsense. Okay? That is, you know, some people, you know, it might work for them, but it's not repeatable. It's not dependable. It's just total nonsense. I mean, I don't understand. You would never do that in anything to achieve success. I don't understand why people would do that with trading. But anyways, this is not the way to do it. It's not the way to learn. You have to apply a concept. You have to apply principles and concepts to historical charts, come to conclusions about them based on what you know to be true about those structures, about those zones, those trend lines, and so forth. And then see whether or not price played out based on the conclusions that you come to. If price did not play out based on the conclusions that you come to, then guess what? Your concepts and principles are incorrect and they don't work. But if they are consistently giving you good results, if you're coming to conclusions and those conclusions are being fulfilled, and you're consistently getting results, then that means what you are doing works. What you are locating works. And why is that powerful? Well, it's powerful because now when we look at the daily chart, we're trying to determine what are the chances that something is going to happen right this moment. And we're examining this piece right here on the daily chart. Why are we examining this piece on the daily chart? Because we're studying this structure. And we ask ourselves, is this what price usually looks like when the institutions are about to create a downtrend? And we know what the answers are, because we've asked these same questions of price 1,000 times when we do our classes. And the conclusions that we would come to is no, this is not what they're doing. So when you know what the answer is to a question, then it leads you to ask other questions. So if we know that this is not a structure that the banks typically create to create a downward trend, then doesn't that lead you to suspect that a downward trend is not going to be formed right now? And wouldn't that further lead you to suspect that if a downward trend is not going to be formed right now, then we're likely not going to get a weekly downtrend being created at this time? The answer is yes. When you apply logic, okay, and reasoning to the analysis, you come to conclusions. So now we know we should be careful with being short. I was short the market. I got out of my positions. I took my profits. Because when I see a lack of proper structure, I say, hey, something's up. I'm out. Until I see something proper or I see an explanation for why the structure is not proper, if it's not clear, I'm not trading it. I only trade it when it's clear. When it's clear, I trade it, I make money. If it's not clear, I stay out of the market and I wait until I understand what's going on and I understand why price is doing what it's doing. And then I come to my conclusions. If the conclusions are high odds and price is going to move from one place to another place without any obstacles, I take advantage of it. But the daily chart, we're looking at this, we're not seeing anything clear. So what does that mean? Stay out of the market. Okay? I'll be focused on doing analysis, doing classes, and increasing my skills, increasing my abilities and my awareness, and building up my knowledge base of what I know to be true about the markets when the markets are not in a tradable condition. Okay? All right? So you see what I'm talking about? Okay? You need to, in my opinion, you want to be consistently good at understanding why the market's doing what it's doing, and you want to be consistently able to withdraw money, make profits from the market. You have to understand what's going on. And you'll never come to understand what's going on if you're not focused on learning what's actually happening in the markets. If you're watching everything else except for what's really happening, then how are you ever going to learn, right? I think it's kind of common sense, right? But that's just my opinion. Any questions from any of you? We covered a lot, 45 minutes. I think we did a good enough time. So, you can take what we talked about on the S&P and you can apply it to the NASDAQ, the Dow Jones, the same thing. If the SPY is not ready to drop, neither is the NASDAQ, okay? Neither is the Dow. Okay, you can pretty much take that to the bank. So if you know we're in a waiting pattern, do you want to get in short right now? When I post online, very long-term bias on the market is short. Does that mean you want to just get into the market right now? No. You want to time this. I mean, I want to time it. So I'm going to time this. I'm going to wait for the proper structures. When I see those downward trends being formed, I'm going to react. I'm going to get in short, and I'm going to base my risk off of those downward structures being created. I'll know exactly where to get in. I'll know exactly where my stop loss is. And I'll know exactly what I should expect. Excuse me. And you know what's the great thing about knowing exactly what to expect? It takes the guessing game out of, well, when do you know when the trade's not working? Okay. A lot of people, they're like, oh, I'll just add to my losing position. Eventually, it's got to go in my way. I'll just add to my position. Eventually, it's going to go. When you know what to expect, you know where to base your risk. And you'll also know when to add to your position. Because as price plays out in our favor, okay, as structures continue to be built, as supply areas continue to be contacted and price continues to react to those supply areas, these will be the signals for us to increase our overall short exposure. We're not going to build a huge short position if we don't see proof that the banks are interested in pushing price down. That's just kamikaze stuff, man. You just blow up your account in a heartbeat. I see so many people do things like that. It's just pure craziness. No. You need to know what to expect. You need to know what the chances are that price is going to continue moving down. And if they're high odds, you get into one position. As it plays out in your favor, you add until you start to see the formations that would support a move to the downside start to be dismantled on the lowest time frames. When you see those structures starting to be dismantled on the lowest time frame, that is your signal to either loosen up on your position, lighten up on your position, start taking some profits, and then when new structures to the downside start to be formed, you add those positions back in. Or if the structures on the downside start to break on the 2-hour, start to lighten up on your positions. If they start to break on the daily chart, lighten up even more. You understand how it works? Very, very well organized way of entering and exiting the market based on what's truly happening, the real forces that are pushing price in the market. Okay. Thanks for analyzing SPX 500 carefully. No problem, my friend. Just wanted to give you an idea of what it is that we do here and give you a better understanding so that when you're sticking around and watching the analysis that we do, you have an idea of what it is that we're saying, okay? You know, look, NASDAQ is same circumstances, okay? We have a bearish bias, but we're holding off right now until proper structures are built, and then we'll take advantage of a move to the downside. Dow Jones looks super yummy, super yummy. I think it's just on the verge of creating what we need to see to get into some short positions on here. Somebody was talking about NVIDIA. We'll quickly look at that. We're bearish NVIDIA. Look at that, okay? We've been bearish NVIDIA for quite some time now. Very long-term bias. Long-term bias is bearish, okay? We expect this thing to drop, and it has been dropping, okay? And look at the weakness in it now. It's going to continue. There's no doubt in my mind that it's going to continue. All right, let's see. S3-pack. I kind of agree with you on the big bank statement, but at the same time, retail is 5% of the market. So it is largely big player versus big players. Yeah, there's a lot of big players though, okay? There's a lot of hedge funds. There's a lot of big players in this market. Not all of them are in on actually moving the markets. All right. Us guys who sit at home, we're just a small percentage, but there's a lot of people investing money in the markets. Okay. A lot of people. You know, you have pension funds, you have retired people trading their own funds, you got mom and pop shops investing money in mutual funds. You got so much money invested in so many assets out there, okay? The amount of money that's invested in the stock market is just phenomenal. Wall Street Journal did some articles on it. I can't remember the figures off the top of my head, but it's a lot, okay? It's a lot. Okay, when an area is removed, I still can see that area being reacted to. Yeah, sometimes. Okay, I guess we're good then, okay, guys? Good session. You guys enjoyed it. I hope you did. I hope you enjoyed it. I hope you got some good stuff out of it. And that's it. I appreciate your time. I appreciate your support. If you haven't liked the tweet that I made about this session, I'd appreciate it so we can get the word out to more people. I'm trying to influence as many traders like you and I to actually do the right thing. You know, we got scammed. We got beaten up over the last 2 years. So many of us lost our jobs. So many of us are dealing with increased payments in mortgages, in gas, in food. I mean, our families need us. We need to do the right thing. We need to be creating a financial stability for our families. And we're not going to do that if we're going to be played by these banks. It's just not going to happen. So we got to work together. And me helping you is not going to take away from my family. So this is a beautiful thing that we've got going on here. Me helping you just means more comes back in my way in good karma. So let's just get the word out there. Let's spread it. It's our duty to get the word out there and help as many people as possible. I really, truly believe if you go and you help me with retweeting and liking and getting the word out there, you helping somebody else that isn't aware of this, if it can change their trading, change their financial future, and change the future for their family, it's going to come back at you, okay? And all I request is a little press of a button on your mouse, and that's it. Okay, for you to do your part. All right, doable? I think so. All right, guys, enjoy the rest of your day. Thank you so much. I appreciate your time and enjoy the day. We'll see you in the Telegram channel. Take care.